now. So yeah, welcome to part two. So yes, we're going to be continuing from where we left off, and yes, I believe this will be of very good importance to you. So now let's go straight into the analysis. Now, first things first, let's take all of this off. Yep, let's take all this off so we don't confuse ourselves. This is very important. Take things off the chart. Okay. Now that we're here, now what are the couple of things? What are the first things we will do is basically break down how we got to this result and what to expect after that particular TP hits that we got on gold, right? Now, the next thing is the minute price got to this particular level, okay, we saw an immediate reversal in price. Now, listen, if this was a retracement and this was going to be an impulsive move, we noticed a couple of things. Now, what are those things we noticed? We noticed that price was making a series of lower highs, lower lows, lower highs, lower lows, lower highs, lower low. Okay, price was making a series of couple of trends, trend-like retracements. So in order for us to buy, we would need a change of trend, right? Simple as that. So we need a change of trend. We need price to break out of this high before we can look for buys. We need a price to break out of this high before we can look for buys. Now, what do I mean by this? Seeing as price was retracing with a trend like retracement, we needed a change of trend confirmation for us to look for buys. Yes, so what I did at the time was I waited patiently. I waited patiently for price. Okay, when all this move was happening, I didn't buy. I was not interested in because chances that price could pull back to this level and totally crash. So I needed confirmations. Now, the minute price broke above this level, indicating a change of trend, this is where my interest was picked immediately. So I pulled down to the lower time frames, okay, and I simply marked out my bias, okay. I saw a brick market structure here, okay. I saw a very tiny brick market structure. Yeah, it's pretty tiny. I'm just gonna zoom in further so that we see what I'm doing. Okay, so I marked out my brick market structure. All right, and my other block was my POI, right? I marked it out like this. Wonderful. So I called a buy limit here. Okay. It was a Friday. It was a Friday. I can never forget. It was a Friday. This was a trade that I used to pass my 100 face challenge. It was one of those beautiful experience, you know. There was a Friday. I took a buy here. Okay. Stop loss at the base. And my TE target was price breaking above this level. This was my TP target. So yes, my target was to hold the trade over the weekend past this level. I needed this much. I needed exactly here. I needed exactly here to pass my phase two. Okay. I needed exactly here to pass my phase two. So I bought gold that day. Okay. I bought gold that Friday. If you notice, if you look at the bottom, it will show you Friday. Okay. It was a Friday. Price tagged me in on trade and price bought. Price then made a series of higher highs, more higher highs, higher lows, you know, higher high indicating that it has left the bearish trend, following the bullish trend. And then a series of higher highs, higher lows, higher highs, higher lows. Okay. Now, let's say I missed this trade. There was also an opportunity to buy this trade right about here. Okay, there was also another break on market structure, and there's also a return to order block here. This fueled my confidence in believing that price will buy because technically, I am good for a break even. But yeah, so I held over the weekend, and on Sunday, price opened, price shot up, price came down, price moved a bit here and there. This was still Friday. No, sorry, this was still Friday. So immediately it was Sunday. Immediately it was Sunday, right? Immediately it was Sunday. Price just took off. Literally, price took off. I moved my stop loss to my entry, and I held this trade all the way to TP. It was a very clean trade. It was a very beautiful way to start the week. I called this trade on my Telegram as well on WC VIP. So make sure to join WC VIP if you want to get clean trades like this. Now, immediately price hit TP. It was a very sweet trade. And yeah, so basically it was a very nice transition from bearish to bullish. If you notice, I was just dancing between the market structure of gold, and I was taking advantage of the fact that I understood, right? I understood price directional bias. What do I mean by this? Now, immediately this CRT closed out, right? Immediately CRT closed out bearish. I noticed on that bullish CRT, From a bearish CRT, we immediately moved into a bullish CRT, right? So I knew that price was going to break this level for sure. Like I knew that price was going to break this level for sure. Now, all these things, I know they look a bit complicated or a bit confusing, but I guarantee you, when it comes down to it, we're going to teach you. I can put everything in one video, so it's a bit, yeah, it's going to be a bit stuffy, but I hope that with the way I've explained it so far, it makes a bit more sense. Okay. So I'm going to remove some couple of things that I don't, feel a bit suffocated. I'm going to take some things off so it's a lot easier to understand. Okay. Now, so basically, MAD price hit TP. There's a reaction, okay, a bullish reaction. So I expected the next day to be bullish as well. Okay, the bullish reaction was quite strong, and we could notice a change of trend on the 4 hours, okay, time frame, and we also noticed a change of trend here. This allowed me to capitalize on the 4 hours time frame to hold over the weekend. It was a very nice trade. It was a very simple setup, and yeah, just like that. Now, the MACD price bought for that day, okay, I continued chasing the trend. I continued chasing the trend. So basically, price bought all the way. And there was something that happened here that was really, really good to see. Okay. Now, fair value gaps are very, very powerful, and you can trade them the way I've explained before. So one of the first thing I did was that after price hit our TP here, okay, there was a breaking market structure. This automatically is a breaking market structure. And there was also a fair value gap here. I had on that buy limits here as well, which was really insane. I was just, yeah, I was making go back and forth. Yeah. So I had a buy limit at this level. Okay. I had a buy limit at this level, right? And stop loss at the base. Stop loss at the base of this candle. Now price came, dropped into my buy limit, which was nasty work. Price moved into profits. Now, price was in profit for me. And then all of a sudden, price pulled down. I took my break even because I didn't think price would want to sell again, but I was mistaken. And price came and price took off. Oof, it was so painful to watch price come into my entry back, then finally taking me out. And it was just, the god awful day. Now, after that happened, I wanted to get back on the buys. So what I simply did was I marked out the market structure here. Okay, same principle, same reasoning, same application. I came down to the 30 minutes, okay, real quick. I came down to the 30 minutes and I marked out this order block as my entry. I marked that order block as my entry. Okay, I'm going to take off this value gap that I marked here so this chart doesn't look too disorganized. I'm going to take this off as well. We'll see that. So we understand what happened here. I marked out this candle and yep, my buy limit was here. So whenever I try to call the trade, I like to give myself room because I expect price to deep into my buy limits sometimes. My stop loss was here, which was crazy work from price, which was crazy work from price. It was insane. Now, price dipped into my entry and immediately reversed, and I was in profit. I was in profit for days. I held, this was like middle of the night, 12 a.m. I held throughout the entirety of the day. It was pure chaos. It was pure chaos. I was fed up. 2 days worth of hold and nasty work. And this happened simply for a couple of reasons. Now, this trade happened this way simply for a couple of reasons I'm going to explain. Like I said, when the daily candle is giving you two buyouts at the same time, you can always expect a range. You can always expect a range. So basically, what happened was that price was bullish. Okay. Price was bullish. So basically, you would expect the next day to be bullish. But from 12 a.m., price was bearish and it was being stubborn. So basically, there was like two buyouts mixed together. And one very important thing, make this a rule for you, make this a rule book. I'm going to drop a hidden gem is that whenever gold is taking time to buy, whenever gold is taking time to buy, okay, whenever gold is taking time to buy, just know that it is a problem. Okay. And if it's struggling to buy, struggling to sell, ranging, just know it's not going to work out. Okay. Just know it's not going to work out. What made me sure that it was not going to buy anymore was basically this. I'm going to show you real quick. Okay. I'm going to show you real quick. So basically, I noticed that price trend was looking really, really fussy. This is not how a bullish trend should look like. Okay. This is not how a bullish trend should look like. It was bent. It was really bent and it was really bad shape. Okay. It was looking like this. This is not how price trends. Okay. This is not how price trends. And because I know this, I then close partials. Okay, I told my Telegram members, okay, that's it. Let's close partials. We're done. And we call this off because we anticipated that price. Since price is at the key level, okay, here massive crash, here massive crash. There's also a very high chance that this could lead to massive crash. Okay, so because of this, we stopped buying and stayed off the market. And shortly after, what happened? Shortly after, price made a massive crash, and as you can see, and also what made price pull back simply because of the fair value gap here. As you can see, fair value gaps tend to pull price down levels. Now, there's a couple of things you want to know. There's a fair value gap here. Okay, that was not tagged in. Okay, sure, price might not tag it now. Okay, but sometime, somewhere, price will remember and price will basically come to clean it out. That's the way price behaves. Okay, these things are always magnetic. Okay, we don't know how next week is gonna look like, but there's a high chance that next week we can get a bearish CRT. I'm gonna show you real quick why I believe we have a bearish CRT in our hands. So if you look at the weekly time frame, okay, we are basically observing a bearish CRT, okay, on the weekly time frame, and one of the factors that price broke above, pushed down, okay, and if we come to the daily, we can see more bearish CRTs from here in which the crash happened with, and yeah, so depending on how next week goes, chances that price could come down more before going up, or price could just take off. So we have to really settle down to not be in a rush, okay? Because we're getting double bias. So whenever there's a double bias, there's double problems. So you need to stay safe. You need to watch out for price. You need to make informed decisions. So yeah, this is how we're gonna approach next week. So yeah, thank you for watching. I hope this video gives you a bit of understanding of how to trade gold and what to look at and how to take advantage of gold using fair value gaps, order blocks, very much sure. Trying. If you want to learn about these things, if you want to learn about these things, then you should join the Grid Academy. Thank you very much. I will catch you guys next time. Bye.